You ever feel like you're just glued to your charts all day, waiting for that perfect setup to finally show up? Well, what if you didn't have to? What if you could step away and only tune in when the best opportunities are most likely to happen? Today, we're going to explore a much more precise, time-based approach to trading. So here's our game plan. First, we're going to debunk the whole idea that you need to be watching charts 24/7. Then we'll dive into 3 really powerful tools: a signal that helps you spot when the market's bluffing, a schedule that tells you exactly when to pay attention, and a framework to understand the market's next move. And finally, we'll stack them all together into one cohesive strategy. All right, first things first. Let's talk about the biggest hurdle for so many traders, just how draining and frankly inefficient it is to stare at the market tick by tick all day long. It is an absolute recipe for burnout and for making bad decisions. So let's just ask the big question right out of the gate. Is all that constant screen time actually necessary? The short answer? Absolutely not. No way. There is a much smarter, more surgical way to approach this. The solution is to completely shift our focus. Instead of obsessing over price, we start focusing on time. By identifying these very specific times of interest, we can know exactly when to show up to the charts, ready to go, and just ignore all the noise the rest of the day. So how do we find these perfect moments? We're going to use this awesome 3-layer filter. First, there's the smart money technique, or SMT for short. That's our signal. Second, we have macros. These are our specific time windows. And third, delivery profiles. This helps us understand the story the market is actually telling. Let's kick things off with our first tool, SMT. This is all about knowing what we're supposed to be looking for. It's this really powerful divergence that basically screams, hey, a big market reversal might be just around the corner. So, what is SMT? Okay, imagine 2 dancers who are always perfectly in sync. Then, all of a sudden, one of them makes a big move, but the other one stumbles. They fail to follow. That little disconnect? That's SMT. It's when 2 markets that usually move together, like the NASDAQ and the S&P 500, fall out of sync, giving us a hint that the current trend is probably running out of gas. And this is where it gets really clear. You've basically got 2 patterns to watch for. For a bullish reversal, a move up, one market will dip to a new low, but the other one just won't. It'll make a higher low. That's your clue. And for a bearish reversal, it's the exact same logic, just flipped upside down. It's like seeing a crack form in the market's momentum. Okay, check out this real-world example. It makes it so clear. You see ES, the S&P 500 futures, pushing up to take out a previous day's high. But look over at the NASDAQ. It doesn't follow. It fails to make that same new high. That non-confirmation, that divergence, that's your SMT signal lighting up, telling you a top might just be in. Okay, so now we know what to look for. Let's add our second tool, macros. This answers the really important question of when to look. Think of these like the market's rush hour, these very specific, high-energy windows where the biggest moves are most likely to kick off. And here they are, the key windows, all in New York time. And what's wild is you could literally just focus on one of these, say the New York morning session from 9:45 to 10:15 a.m., and find more than enough action. It just proves it's not about being there all day. It's about showing up at precisely the right time. Now, this is super important. What happens if you spot a perfect SMT signal, but it's happening outside of these windows? The rule is simple. You wait. You do not chase that first little move. Instead, you just sit back patiently and anticipate the real move, the big expansion to get going during the very next macro window. All right, onto our third and final tool. This one answers the question, where are we in the market's story? It's all about understanding the market's narrative, and more often than not, that narrative centers around a classic fake out. And this quote right here, it really nails the whole philosophy. Your job isn't just to follow price patterns. It's to become an expert at spotting manipulation, the market's classic fake out move, because the real move, the distribution, is almost always what comes right after. The easiest way to think about this is like a simple 3-act play. Act 1 is accumulation. That's the setup, where the market is just kind of coiling up, building energy. Act 2 is manipulation. This is the big fake out, the head fake designed to trick everybody. And then Act 3, distribution. This is the grand finale, where the true, powerful move finally unfolds. All right, we've got our 3 tools. Now for the magic. We're going to layer them all together. This is how we go from just seeing interesting patterns to building a single, really high probability trading idea. So think of this like a three-step checklist. First, we look at the big picture, the context. Are we in that manipulation phase? Then we zoom in on the signal. Did an SMT divergence just pop up? And finally, we check our watch. Is this all happening inside one of our key macro windows? When you get a yes to all three, well, that's when things get really interesting. Okay, let's walk through a real example so you can see how this works. It's after 10 a.m. and the market starts ripping higher. It looks incredibly strong. We immediately flag this as our context. This is Act 2, the manipulation, and it's designed to suck everybody into buying. Then, right at the peak of that run, at 10:28 a.m., boom! There's our signal. A clear bearish SMT divergence appears, and that's our confirmation. It's like the market is whispering to us, okay, the fake out is over, get ready. And here comes the final piece of the puzzle, the timing. So we've got our context, we've got our signal, we just need to be patient. And what happens? Sure enough, the real move, the big sell-off, kicks into high gear right as the 10:45 a.m. macro window opens. I mean, context, signal, timing, all perfectly aligned. It's beautiful. So if you take just one thing away today, let it be this. This is a complete mindset shift. We stop chasing price and hoping for a signal. Instead, we learn to anticipate when the market is supposed to make its move. We focus on the time, because when the time is right, the price action you want will almost certainly be there. It's always time, then price. All right, we've covered a ton here, from spotting divergences to literally trading on a schedule. This whole framework isn't just about finding better trades. It's about reclaiming your time and approaching the market with precision. So the question I want to leave you with is this. Now that you know when to look, how will it change the way you see the market?